How does the European Central Bank's decision impact the stock market? What does it mean for investors? Well, let's delve into that. On Tuesday, March 12, 2024, the European Central Bank, or ECB, held a policy meeting. Investors were on edge, fearing an immediate hike in interest rates that could stifle economic growth. However, the ECB chose to maintain the current rates, leading to a collective sigh of relief and a positive upturn in European stocks. This decision indicates that the ECB is prioritizing the ongoing economic recovery over an aggressive stance on inflation. Concurrently, the ECB has affirmed its commitment to inflation control. They've hinted at potential rate hikes later in 2024, should inflation not significantly decline. This cautious approach reassures investors that the ECB remains vigilant in managing inflation, albeit at a measured pace. This decision by the ECB has set the stage for a cautious optimism in the European stock market. How has the market reacted to this decision, and what are experts saying? Let's delve into it. The Pan-European Stock 600 Index, a broad barometer of European stock market performance, enjoyed an uptick of around 1% by mid-morning on that Tuesday. Sectors that generally flourish in a lower interest rate environment, especially technology stocks, saw a more robust rise. Now, let's hear from the experts. Michael Hewson, the chief market analyst at CMC Markets, provides an insightful perspective. He says, the ECB's decision reflects a delicate balancing act. They are trying to support growth without letting inflation spiral out of control. Jessica Hines, an economist at Capital Economics, echoes this sentiment. She comments, the market seems to be taking comfort in the ECB's message. Investors are hopeful that the bank can manage inflation without derailing the recovery. Experts see the ECB's decision as a delicate balancing act, and the market seems to be taking comfort in this message. So, what can we expect moving forward? Well, there are a few key factors that the market will be keeping a close eye on. Firstly, the actions of the European Central Bank. Will they stick to their commitment of maintaining current interest rates, or will they pivot if inflation doesn't show significant decline? Secondly, economic data releases. These can provide valuable insight into the health of the European economy and could potentially influence the ECB's future decisions. Lastly, the ongoing conflict in Ukraine. This wildcard could disrupt supply chains and possibly fuel inflationary pressures, adding another layer of complexity to the ECB's decision-making process. But one thing is clear, the ECB's commitment to controlling inflation in the long run remains a key focus for investors. They are looking for reassurance that the bank can manage inflation without derailing the recovery. In the face of these uncertain times, the ECB's decision has provided some cautious optimism for investors in the European stock market.